In this video, I'm going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from December 27, 2021. This technical analysis will be in two parts. First, I will do it on the weekly chart, then I will do it on the daily chart. So this way we will be able to get the most accurate results as we are getting for last many months. Okay, so I will first begin with the weekly chart. Okay, we see weekly chart means one candle is of one candle represents 1 week. Okay, so one candle means 1 week. Okay, so if you look into this, the last candle, okay, that was formed for the week of December 20th, then it's a bull candle. Okay, uh, so means a heavy bull candle, and the interpretation of this, the heavy bull candle, means because it's a heavy bull candle, that means that on Monday there are chances that market will shoot up. Means see, I'm not saying that on Monday a bull candle will form, but I'm saying that the market will first try to shoot up and then may come down, but it will be more clear on the daily chart, like how exactly market is going to react on Monday, okay, and on other subsequent days. But this is just the interpretation of this candle. Now one more thing is here, that this candle failed to engulf this the previous bearish candle. Okay, so now because it failed to engulf, so that means that market is not heavily bullish. Yes, market is just partially bullish, okay, or just bullish, but market is not heavily bullish, because in order to be heavily bullish, one bull candle must engulf the previous candle completely. Okay, well, this thing will be more clear through the technical indicators. Okay, but as such, this was the interpretation of the candle. Now let's do the technical analysis here. See, we have the Bollinger Band. This is the upper band of the Bollinger Band. Okay, market has closed above the median of the Bollinger Band, which means market is bullish. Now comes the moving averages. So if you look into the moving averages, there is a clear fan out, clear fan out. Okay, so this fan out, there is no crossover. Okay, which means market is bullish. If you look into the Ichimoku cloud, so through Ichimoku cloud, because market is moving above the Ichimoku cloud, market is not in the cloud or has not crossed the Ichimoku cloud, okay, which means market is bullish. So all of these indicators are saying market is bullish. Now if we look into some other technical indicators, okay, if you look into the MACD, yep, so MACD is still saying market is bearish. Now it is the only indicator that is saying market is bearish. Okay, if you look into the stock RSI is bullish, but the K channel and the D channel are less than 50, so that could be a problem for the bulls, but otherwise it is bullish. If you look into the divergence indicator is normal, not a problem. Momentum, okay, momentum is also normal. Means momentum is not supporting either of these parties, bulls or bears. So other than the MACD, all of the technical indicators on the weekly chart are saying that market is bullish, but because MACD holds or MACD is the most important technical indicator, okay, and you cannot neglect that. So through and the MACD is saying market is bearish. So until and unless MACD is bullish, okay, we cannot say market is bullish. That means, okay, this kind of situation, it says that market is um, uh, is going into or is moving into or is into the consolidation. Okay, or market is trying to consolidate. So this is the same thing that I told you last week. Okay, that market is trying to consolidate means market will be range bound, market will move, okay, between these two numbers. Okay, for example, one could be this number and the other could be this number, so market will be range bound. So that is what we call as the consolidation. Okay, anyways, but this thing will be more clear on the daily chart whether market is actually trying to consolidate or not. Okay, but as such, as of now, okay, all of the indicators are saying market is bullish except the MACD. So only MACD is saying that market is bearish, and because MACD holds means MACD is the most important technical indicator. So yes, you should respect the MACD, and you should trust the MACD. If because if MACD is still not bullish, so you should avoid buying again. you should not buy, you should avoid buying until and unless MACD is positive or MACD is supporting bulls. So when MACD will support the bulls, okay, with along with all of the technical indicators, then is then that will be the sign that yes, now you can enter into the market, okay, and you can buy. Fair enough. Now let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Okay, now daily chart means one candle represents one day. So we will see like how exactly market is going to react or market is going to behave in the coming week. Okay, okay guys, so we are here on technical analysis. Fair enough. So this is the daily chart. Daily chart means one candle represents one day. Now here if you see, so first let me write down the support and resistances quickly, okay, for your reference. So we have this resistance 37,150, 37,150 or 151. Then we have this resistance at 36,650, 36,650. Okay, then we have this resistance at 36,110. This is the most important and most critical resistance, as I'm telling you for last many months. Okay, then we have 35,700. Again 35,700, it holds you know, importance here. Then we have 35,430, 35,430. Then we have 35,115, 35,115, and then we have 34,780, 34,780. One more is there. Let me write it down. It is 34,530, 34,530. Then below that we have a support at 34,050, 34,050. Oh, okay, so these are a lot of support and resistances. Well, anyways, yeah. Now comes the technical analysis. So first, let me do the technical analysis, and then I will tell you the probable movement of the market. Uh, Bollinger Band. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Market has closed between these two, which means market is bullish. Now comes the moving averages. Okay, this is now okay. Through this candle, through the last candle, all of the moving averages are in place as they were supposed to be. Means there is a fan out. Market is bullish. Okay. Up to this candle, it was not clear, but on this candle, yes, it is clear because there is a fan out. Market is bullish. Now comes the Ichimoku because market was able to close above Ichimoku and trading above Ichimoku, which means market is bullish. Now if we look into other technical indicators here, okay, other technical indicators are saying first we have the MACD. MACD is bullish, clearly bullish. Then we have the stock RSI. Stock RSI is also bullish. This is fantastic. See, whenever MACD and stock RSI are supporting, one direction, whether it's a bull direction or whenever they are supporting, some movement, whether it's a bull movement or a bear movement, which means the market is most likely to follow that particular direction. Divergence, so divergence is not a problem here. Then comes your RSI, okay, the momentum. So momentum is not supporting either of these parties, bulls or bears. So yes, this thing is finally clear, okay, on the chart that yes, market is bullish. okay, on the daily chart. This, but on the weekly chart we have seen that except MACD, okay, all of the technical indicators, they were saying that it is a bull market, but MACD was bearish. But on the daily chart, all of the technical indicators are bullish. Now, okay, now comes the probable movement of the market in the coming week. See, there is this resistance at the high that Dow Jones, okay, it made or it formed this high of 36,566 on November 8th. This is 36,566. 36,566, which means market is not bullish until and unless market crosses and closes above 36,566. Because in order to move up, in order to be bullish, in order to be, like heavily bullish, market must first break its own high that it formed on November 8th, that is 36,566. This is the rule of the market. Okay, now comes the immediate previous high. The high of this candle is 36,190. It is 36,190. So Dow must cross and close above 36,190, okay, on the daily chart, particularly on Monday, in order to be bullish. So first it will move up, it will hit 36,110, okay, which is a heavy resistance, as I'm telling you for last many months. Once it crosses 36,110, then it will move towards 36,190. When it crosses 36,190, then it will move towards 36,565. And when it finally crosses and closes above 36,566, then it will shoot up towards 37,000. This is how it will work if it has to be bullish. And if it fails to cross 36,110, like it did on December 16th, okay, and then it was holding at 36,110, okay, for like seven days, 6 or 7 days here, or 8 days, okay. So 36,110 is very heavy resistance. Now, now there is, one more thing here. If you see, the pattern of these three candles, these three bear candles, then what you will notice, okay, this kind of pattern we call it as three black crows. Okay, although it is not completely three black crows, okay. So three black crows means this candle was supposed to be, okay, open somewhere around here, okay, and then come down, and this candle was supposed to be closed somewhere around here and then come down, but it still looks like three black crows. Now what is the meaning of these three black crows? So three black crows, whenever there are three black crows formed, that means there is going to be a reversal in the market. These are the three black crows are the indication of a reversal in the market, and this is what you have seen here. Means this bull candle, this heavy bull candle, okay, where the open was the low and it shot up, okay, this is the indication of the reversal of the market. Now again, the same thing applies here. If you look into these three candles, okay, so these three candles are three white soldiers. Again, three white soldiers. So just like three black crows, whenever three white soldiers are formed, it is again an indication of a reversal in the market, which means most likely market is going to come down, because this is an indication of a reversal in the market. Okay, now how this market is going to react, or how it can save itself. So market can save itself only if it only if it opens above 36,190. Means if there will be a gap up open on Monday, means if there is some good movement in Asian and European markets, as and that could means that could help, Dow to open somewhere above 36,190, then only we can say that the myth of, okay, or the rule of three white soldiers, it is broken. And if not, and if somehow market opens below 36,110, this is the critical point. If the market opens below 36,110, then this is what is expected to happen. Market will come down and it will follow the rule of three white soldiers, means the reversal. Now if somehow market is able to open above, okay, through gap up, means if there will be a gap up open above 36,190 particularly, okay, but yes, we can also count on 36,110. In that case only market will move up. But this 36,110, it holds, means it is very very important here, this number 36,110. So on Monday you need to see what is going to happen in the market. Now whenever market moves up, then we know, okay, there is an immediate resistance of 36,566 here, and then comes the immediate resistance of 36,650 here, and when it crosses and closes out 36,650, in that case it will move towards 37,150. Okay, but otherwise, and when you see market is coming down here, okay, and then on Tuesday also if you see market is coming down, and on Wednesday, okay, there may be a little rebound or something, for example on Tuesday or Wednesday, okay, means when market is in the cloud, then after hitting the lower boundary of the cloud, market will try to retrace, okay, and if it fails to retrace, in that case it will further come down, and in that case, because now it will be coming down, second time, this means that yes, in that case market will be very heavy bearish. Okay, so it all depends on like how market is going to open, not react or behave, but how market is going to open or where market is going to open on Monday, and accordingly market will move, either it will be bullish or it will be bearish. Okay, but most likely there are very very heavy chances that it will be bearish because of the rule of three white soldiers. Okay, so market will be suppressed here. Okay, market will, means yeah, so market will be suppressed here. Now one more thing that I told you on the weekly chart is about the consolidation. I told you that on that market is trying to consolidate. So if you see market is coming down here, okay, so this kind of pattern, okay, this is what we call as the consolidation. Okay, means market is just up down up down up down, means market is range bound, which means market is trying to consolidate, as simple as that. Okay, so in the coming week it will be more clear whether yes, like whether there is a consolidation or not, as simple as that. Okay, so just wait for Monday and see how market is going to behave or react, or where market is going to open. Okay, so Monday, yep, so Monday. Okay, now, sorry, so yeah, guys, so I have provided the link to my Discord group spreadsheet in the description of the video, so you can take a look. And also I have provided the links to my options strategies programs. So if you wish to join my programs, then you are welcome. So guys, this was the technical analysis for Dow Jones Industrial Average Index for the week commencing from December 27th, 2021.